$46 trillion. I can't even imagine spending that much money. I stumbled upon this article that pretty much said that's how much was wiped out of Wall Street. So that includes your stocks and crypto market. I'm going to pretty much decipher my own thoughts in regards to that article in this video. So taking a look at this article is from Business Insider, where it says from the stocks and bonds market, and they don't think it's going to stop, it's going to keep going. It is quite expected, and I'm going to tell you why exactly. This guy looks completely stressed out, which is how a lot of these floor traders be looking a lot of times. And this was, according from Bank of America, that was the source, and liquidation is happening. So what's happening with liquidation is when money is pulled out of the stocks or whatever equity that you have and you're converting it back to cash, and where you park that money, it's all up to you. It's just not in that particular market. I'm going to be breaking down exactly what does that mean and how does it all work. We know that with inflation, there was an artificial printing of money. And what happens is with printing of money, it doesn't really add value. What it is creating a fake impression on value in something when in reality, it's not. So the old barter system, right? You had two fish that you want to exchange for one loaf of bread. That's exactly what that is. So you can't just magically cut those fish in half and say, I have 4 fish now, and I'm going to give you, I need 2 loaves of bread. That's not going to happen, right? If you cut the fish in half, you literally still have 2 fish, and you should just be getting 1 loaf of bread. That is what's happening with groceries, as we see that we're paying more for groceries when really just the dollar is being inflated. And I'm going to show you this illustration of exactly what I mean. So let's say, right, in the actual market, there was $100 of cash in the actual market. I'm putting it here. And now the Feds is printing money, printing money, printing money. What they're doing, they're not actually increasing the value of the cash. As we can see from this diagram, if the value of the cash goes up, right, everything else should go down. That means your cash should appreciate, but that's not what's happening. When they're going from like $100, let's say they print like to $200, that's not what's actually happening. What's actually happening is this is still remaining the same size. It's not actually shrinking. This is what printing money does. It doesn't make this go any up in value. But the other equities and things that you can actually purchase as investments, they actually can grow as people are putting money into these things. So let's say in the stock market, right, we started with $100, right? And now there's this printing of money that happened again. And now the cash is, let's say, 400. Now, if investors take like 200 out of this and put it in the stock market, what do you think is going to happen? Stock price is going to go up, right? They put $200 into here and we took it out of cash. Oh, it's supposed to be 300 because it was 100 at first and we added $200, right? As we can see, cash does not appreciate, right? But the stock grew. And the same thing is going to happen to bonds. Let's say now the Fed's print even more money. They print another $300. So now we had another 400 again. But then people say, well, screw that. I'm going to put it in the bonds market, right? Let's say the bonds originally had $100 initially. And now we took 300 out of here. So this brings us back to 100. And now the bonds is at 400 now, right? This actually would do the same thing. As we can see, these things are appreciating. Your cash is not, right? The cash is just staying where it's at pretty much, but it's not really appreciating. And that's how the market works. And it's going to happen with crypto, but at a much global scale. With crypto, what I love about it is that you cannot just artificially create and inflate crypto like you could do with this cash here. So there's a limited supply of a lot of these things. And what they do sometimes is they burn some of these cryptocurrencies to prevent it from reaching a thing of inflation. But you do not have to worry about that for Bitcoin, the major index, the major ones, right? Bitcoin, Ethereum, those things, they have a limited supply that you can get of. It serves its purpose similar to gold, But gold, I know you can dig up for more gold. With digital tech, it's a set fixed amount. So meaning there cannot be someone that just creates them when they want to or how they feel like it, which causes this inflation diagram that I'm showing here. It doesn't work that way, right? So that's what I like about crypto. So let's say for demonstration purposes, they put another $300. So now we're at, actually for the sake of crypto, let's say they put like, I don't know, $900, and we took $800 and put into crypto. So then that brings us back to 100, and we put 900 into crypto, right? Let's say it started with 100 and we took 800 from the cash and put it into here. Bam, right? You see that? You see that? It's squeezing all the other ones and everything. These should actually go down too, but this tool that I'm using doesn't quite do that, but not for this sake. Real estate won't ever do that, but this is just an illustration to, show you that they're in a fixed boundary. Pretty much the way the economy works, things are in a fixed boundary. So you can't just make something just go up like the cash that the governments are doing and thinking that it's not going to affect other things. And as people are shifting money, you see that things appreciate over time, right? So what's actually happening with the liquidation? So let's say now they took off, right, the $46 trillion. Let's present it as it was $200 for the sake of this demonstration. So I took 200 from the 300. Now I have $100 left, right? Of course, the stock's value is going to go back down, right? But where's that money going, right? Is it going back to cash? Yeah, it could be going back to cash. And this is where we can kind of see it's not really an appreciation of money, but it just went back here and people are just sitting on it, right? So I transferred $300 from here and put it into here. So now the cash value is at 400. I'm not going to be sitting on this. As you can see, it's not growing as the cash is just sitting there. What it will do is it will give you ability to buy like real estate and stocks at a lower price, because then stock prices are getting cheaper. And then you can go back in and we could see what happens, right? Right now we're in this state where a lot of the cash went back into cash. A lot of the money went pulled away from stocks and went to cash. But what's going to happen in probably a year from now, I'm hypothetically speaking, if the bottom flats out, right, people are going to come running back into here. And by that time, cash might be like super up by a lot. Let's say by like 1,000, right? So now we have $900 in cash to spend, and we're going to put into here. What do you think is going to happen? Stocks value is going to go up. Bonds is going to go up. Crypto, right? And it's going to go up super high. And then that's why we see over the course of like 8 years, right, stock prices just keep appreciating over time, because as the Feds keep printing money, it forces these things to just get bigger and bigger and bigger. But the real value of cash doesn't really grow like that. But these other equities do. So that's why we do these investments, especially right now when things are low. You buy it in a very passive basis. You may not know and understand everything that goes on in the market. Believe me, I'm still learning too. But I have experienced it in 2018 when the trade war was happening with Trump and everything. I maxed out my 401k, and I also put a lot into stocks and different things. And by 2020, I saw that appreciation happening. And it's another cycle that we're going through right now. But this one is much more steeper because there was a lot of excessive thing going on with COVID. And we see the forbearance with the home markets and all this stuff that happened. It's just too many things that's impacting the economy. So therefore, we're seeing that huge impact going all at once. The war, the gas prices going up. It's just too many things. When all that's happening at once, it's just going to keep getting bad until it blows up. And then when it does get super bad, right now is still a good opportunity. Just buy passively on a recurring basis. If you can do every 2 weeks, every month, buy into the things that you believe. What I recently bought was eHealth. I bought Jemai, which is like an Amazon in Africa. I believe in that, and it's like $5 a share. And I've also bought into Coinbase a little bit. But I'm buying things slowly. I'm staking all my crypto right now because it's pretty much every week they pay me over 9% like yearly interest rates. So I get a portion. The way you got to think about it is that 9% divided by 52, because it's 9% you get for the year, but per week you have to do that whole math division. So I get a very fractional every week based upon the amount that I have in there. And that goes across like my Ethereum, Matic, the ones I can stake, not everything that I can stake. So that's what I'm doing right now to kind of build that foundation. And I encourage you to do the same as well. If you're skeptical, being fearful, as long as the world does not end, we don't see Armageddon happening, these markets have to restabilize. And that's how you have to think about this whole situation that's happening. This $46 trillion, yes, it was pulled out of the markets, but the value is definitely going to come back. And when it usually comes back, because of all the printing of money that the government do, they have a lot much more to put in, which makes the stock prices go even further higher and higher. And that's what creates this continuous cycle. And we have the opportunity to build some wealth. So why not do it now? So I definitely want to encourage you to think about this. Look for investment opportunities that you believe in. Don't just do things because people are telling you. Feel passionate about it and know that your heart is into it. So please share, like, subscribe if you found this insightful. And I shall see you next time. Peace.